2 days ago, I made a video on how any beginner can literally start making $100 every single day or $1,000 every single month buying and selling cryptocurrencies, otherwise known as spot trading. And it's literally a risk-free method of trading the cryptocurrency market, right? In today's video, I'm going to equally be sharing with you how you can either buy to make profit or at the same time sell to make profit, otherwise known as futures trading. Now, the reason why most newbies lose money trying to trade the futures market is because they don't understand the concept of futures trading, the strategy to use in futures trading, right? And as well as how to manage their risk properly. And that's why in today's video, I'm going to be guiding you, putting you through everything you need to know and how you can start trading the futures market so you can be able to make at least $1,000 to $10,000 every single month with just your smartphone. Yes, you don't need a PC or a laptop or a MacBook or anything. You just need your smartphone and the right information. And that's why you need to watch this video to the very end if you're a complete beginner, so you can be able to master the art of trading the futures market. Now, first of all, you need some certain applications or some certain tools for you to actually navigate through trading the futures market. Now, first thing we need here is a crypto exchange, which help us to buy and sell this cryptocurrency. All right, the crypto exchange I'm recommending here is Bybit because of its low trading fees. Right, so if you don't have a crypto exchange, what you need to do is just check the link in the description of this video to create your Bybit application, right? And do well to like this video, share this video, and turn on the notification bell after subscribing to this channel, right? So you can encourage us to do more and bring you more content like this, right? So head over to the description of this video, right? So what you need to do is to tap the link here. You can see this Bybit exchange. Tap on the link. So when you tap on the link, this interface will just pop up, right? So what you need to do is to create your Bybit account. Okay, just type in your Gmail and your password, and make sure the referral code you are seeing there is my name, so you see it, right? Now afterward, you now click get my welcome gift. Okay, now you stand a chance to get at least $20 to up to $200 welcome gift, depending on how much you deposit on your first time, right? $100 and above, right? That's what will qualify you to get your additional welcome gift, right? Now afterward, now go to your Play Store or iOS if you are using an iPhone to download Bybit app and log in with this credential you used to create your Bybit account here. So log in. So after logging in, so you come over to your Bybit. Okay, when you come over to your Bybit here, you tap here. Of course, verification is very easy to verify. You can verify your account using your NIN, driver's license, any means of ID. You can use it to verify your Bybit account, right? It's very easy, right? And equally go to your profile to check your welcome bonus, to claim your welcome bonus, right? So first thing first, what you need to do right here is you come over to your trade, right? You come over to your trade. Now, for you to start trading the futures market, you need a capital, right? You need a capital. So I recommend using at least $100 capital because it can help you to manage your risk properly. I'm not saying that you cannot use lesser than that. Of course, you can use less than that, but $100 capital can equally prepare you ahead of the game, right? Now, if you fund $100 capital right there, after funding $100, right, now you go to asset. You're going to see your $100 on funding, right? You're not going to see it on unified trading account. You're going to see it on funding, right? Now, this funding right here is where you can equally transfer it from your funding to your unified trading account. Okay. Now, when you click on transfer, right there, so you can see funding account, unified trading account. So funding account, if your USDT is your funding account, it literally means that you are not, it is not in use, right? So you need to put it where you can be able to use it to trade, which is unified trading account. So USDT, and you now select the amount you want to transfer to your unified trading account, so you can use it to trade. Of course, I've already transferred. So if you don't know how to get your USDT, if you don't know how to buy USDT, okay, to fund the account on Bybit, you can check this video right here. Check this video so you can be able to buy USDT from P2P market. All right. So we go back. So we click on trade right there. So this is the trading section of unified trading account, right? Now, if it's on spot, change it to what? Futures. Click on that futures market, right? Now you can see the chart. If you want to check the chart of the market, right, this is the chart. Now if you click on trade, it means you want to trade the market, right? So right here we have the time frame from 1 second to, and so on and so forth, right? So here is the name of the coin in which you want to trade. If let's say you want to trade BTC, Solana, or any cryptocurrency pair, you tap here. So once you tap here, you make sure you leave it on perpetual, right? Perpetual contract, not on spot. Perpetual contract, right? So here, let me explain BTC USDT. What the pairs, what the information is giving us, right? BTC is actually the crypto which is serving as the base cryptocurrency, right? Now USDT is the one pairing the BTC, okay, which is also called the gold currency. Now we are using USDT as the stable coin because we have different stable coins. We have USDT and we have USDC. But what we are using here in this video is USDT, okay? Now we are using USDT to actually buy Bitcoin, or we're using USDT to actually buy any cryptocurrency, right? And that's what we actually funded in our account, which is USDT. Now, this USDT right here, okay, you can choose to, trade using USDC, but I recommend using USDT because that's the default buying, right? Now, the futures market right here, as you can see, different cryptocurrencies you can choose. Let's say you want to trade Dogecoin, right? So let's say you want to trade Dogecoin, you tap on Doge. Okay, this is Dogecoin, right? So this is Dogecoin. Now we have this cross here and cross margin. We have different type of margin. We have cross margin and we have isolated margin and we have portfolio margin. Now the most popular one we normally use is isolated or cross margin. Now isolated margin simply means you want to trade the market, right? The amount you assigned for that trading, which if you assign to use $100 or $10, the trade, okay, bybit, they are going to use that $10 or 100, any amount you assign to trade for you. So when that amount, okay, got exhausted, okay, you're only going to lose that particular amount. You're not going to lose more than that amount that you have already projected to use to trade, right? Now if it's on cross margin, it means that when the trade is going on, okay, now that amount you want to use to trade, if that amount got exhausted, let's say you have lost that amount, bybit will actually go to places where you have some USDT, you have some money to take some money to keep the position open so that you will not get liquidated. All right, so for newbies, I recommend using isolated margin, okay, but my own is already on cross margin, right? But if you're a newbie or if you're a beginner, use isolated margin, right? So that's for the margin. Now we have what we call leverage. Now leverage simply means a borrowed margin, okay? The leverage simply gives you power to borrow more margin from the bybit exchange. What do I mean? Let's say you are using $10 to trade, right? Now that your $10, now if you use 10x leverage, it means you're multiplying that $10 times 10, okay? $10 is your initial margin, which is original margin. Now times 10 of that $100, we give you $1,000. Now $1,000 is a borrowed margin, which will give you more power or more leverage to actually make money in the market. Now the higher the leverage, the higher the risk, okay, you are taking in the market. So as a beginner, I recommend using a lower leverage, like from 10x to 20x, or max is 25x. Do not go and use 50, 70x because it draws your liquidation point closer to your stop loss or even above your stop loss, which can liquidate your account at any given time. So I recommend managing your risk this way by using low leverage to trade, right? Now we have different types. You can see the available balance. The available balance you see here is the amount I have in my inverted trading account, which I want to use to trade the futures market. Okay. Now I'm not going to use all of them. I'm going to still, do my risk management stuff. Now we have the limit and there are different type of order here. We have the limit order, market order, conditional, chase limit order, and rest of them. But the two popular one we normally use, okay, the two popular used one are called limit order and market order. Now, limit order simply means that when you place an order, okay, let's say you want to buy at a particular certain price, but the market price of that particular coin, okay, the price of that particular coin is not yet on that particular zone. So you want to buy at that particular zone. So if you choose limit order and put the price, it means that you are waiting to buy or sell at that particular price, okay? But when you use market order, it means that you are buying instantly or you are selling instantly at the particular price of that particular coin. Okay, hope this makes sense, right? So now the USDT here is where you are going to put the price, okay? If you choose a limit order, you are going to put the limit price of that particular coin. Let's say Dogecoin now is selling at 0.02. okay, and you want to buy, right? So you're going to put the price in which you want to buy. If I select market order right here, so which means I don't need to put any price, I just need to put the amount I want to use to trade, okay? So for this case, I'm going to be using limit order here, right? So before we go to our technical analysis, okay? So here we have this is where the borrowed margin will appear. Let's say I use 10x leverage, okay? 10x leverage right here, okay? The borrowed margin here, this is what we want to discuss, and I want to use 10% of my account, right? So though I have not put it will not show because I will not put the limit order, right? Limit price order. So let's say if I choose 10% of $100, I think $100 is 10% of $100 is what's $10, right? So if I choose 10x leverage and if I use 10%, it means what we will be displaying on my initial borrowed margin right here is $100. So we're still going to come back to that. Now we have take profit and stop loss. Now take profit and stop loss is basically where stop loss is basically the price in which you put. If you put the price, it means if you're losing, if you get to that price, you are telling bybit to automatically stop the trade so that you will know that you are not certified losing any longer. Like bybit should stop the trade automatically, whether you are online or offline. So once the price reaches to that target, bybit will automatically stop the price for you, right? So if it is take profit, it means you are equally telling bybit, if you input take profit, you are equally telling bybit to actually take profit at a particular price, whether you're online or offline. So that's just it. Now here we have long, we have short. Another name for long is what? Buy. Another name for short is what? Sell. So whichever one you analyze and want to trade, if it is long, it means you are buying. If it is short, it means you are selling. Now we have here this red section here is those that are selling. Okay, if you want to buy, you buy from them, and the green button here are those that are buying, and if you want to sell, you sell to them, they can buy from you, right? So now we have understand the concept of this trading the futures market. Now we move on to strategy. Now strategy simply means you understanding technical analysis to be able to cap out the particular trading style that suits you so that you can begin to use it consistently to make profit in the financial market, okay? And this is where we are going to be discussing technical analysis. And one of the simplest strategy I'm going to be unleashing here or teaching you here is called support and resistance. All right, so now that's why you need trading view. If you don't have trading view, download trading view. So because we're going to be diving into trading view right now to actually analyze the market. You can see everything I'm doing here, I'm doing it with my smartphone, right? So let's go to trading view. Okay, now you come over here, you type Dodge USDT.P because what we are trading is perpetual contract. So you must put .P so you can bring out the perpetual contract of different exchanges of Dogecoin, right? So with the exchange we are trading on is Bybit, you tap on Bybit. So right here we are using support and resistance, right? Support and resistance. Let me explain what support and resistance is all about. Support simply means like a floor of your house or your room. Then resistance simply means like it's like a roof of your house, right? Now if the price come to the floor of your room, like inside your room, if the price bounce on that floor, it tends to go up, right? Now if you hit the ceiling, it tends to come down, just like ball, right? If you hit ball on the floor, it will bounce up. If you hit the ceiling, it will reject and come down as well. So that's basically what support and resistance simply means. And now I'm going to be using 2 time frame here, okay, to actually explain this support and resistance. We're going to be using 4-hour time frame for our trend, which is to know the bias of the market, if the market is actually going up or coming down. And now we're going to use 15 minutes to enter the market, right? Now I'm going to go to 4-hour time frame right here. In 4-hour time frame, this is where I'm going to draw the support and resistance, right? This is where I'm going to draw the support and resistance, you can see. So right here we have our support right here, okay? Our support right here, okay? This is our support, okay? Now this is like a support right here, right? Now I'm going to draw resistance. This is like a resistance right here, okay? This is like a resistance. This is like a resistance up there and a support down there. Now where is the market going? The market is actually heading up. The market is actually heading up upside, right? As you can see, it gets to the support level, it's heading up to the resistance level. Now we want to sell on the resistance level, right? We want to sell. If the market comes to that resistance level, we are going to be selling the market, like we are going to be selling to make profit. Now if the market actually respects our analysis, okay, we are going to make profit. But if the market do not respect our analysis or the strategy we are using, we are going to end up losing. But then risk management will help us to manage our capital, okay, so we will not lose everything we have on our account. Okay, now right here we can see that the market is going up. So what we need to do is to pick our short position, which is sell position, right? So we put it on the resistance level. Now what we are basically doing here is that we are telling this market, right, that if you come here, we are going to be selling. So I'm going to put stop loss right here. Okay, now whenever there's what we call risk to reward issue. Your risk to reward issue, it means that the risk means what you are risking in the market and what you are to get in the market. Now if your risk is 1, which is usually 1, okay, now you want to make times 2 of that 1. Let's say if you're risking $10, you want to make times 2 of that $10, which means your risk to reward ratio must be above 2:1. Anything 2:1 above, right? So which means if you're risking 1, you're expected to make 2, okay, and above, like 2:1, 3:1 and above, right? Now as you can see, our stop loss is right here, so I'm going to give our stop loss a breathing space, okay, like this. Now our take profit should be to the downwards, to the down support. So it literally means that if the market is going up to the resistance, if it gets to the resistance, okay, let the market sell so that you can start making profit. That's basically what support and resistance simply means, right? Now we are going to head over to 15 minutes to find entry, right? So we have marked out our zones or support and resistance zone. So we are going to head over to 15 minutes. So 15 minutes is basically what we use to find our entry, right? So as you can see where the market is heading, upwards to the resistance level, right? So we pick our short position here, drag it to the support level. Now this is where this price you are seeing here is our limit price, because price have not gotten to that place. It have not gotten to that point. We want the price to get to that point so we can sell to make profit, right? So if the price gets to that point and respect it, we are going to be making profit, just like the price respected the support level here. Okay, so right now we have gotten our entry, we have gotten our stop loss, and we have gotten our take profit. We are going to head over to bybit to input these details. But before input these details, we need to calculate our risk, how much we are willing to risk in the market, okay, before we input these details right there. Okay, so now what's on how to calculate your risk? Okay, now you need an app called position size calculator. Now there's a popular app I know which is called 𝗙𝗍𝗶𝗴 crypto position size calculator. As you can see it right here. So it is used to actually calculate your risk, okay, to know what you are risking and know the right position size you want to use for that particular trade. So you don't go and make mistake or start guessing on how much you want to risk, how much you don't want to risk. No, it's very, very important to be specific on how much you are willing to lose if the market goes against you, and how much you are expected to make if the market goes in your favor, right? Now you head over to your Play Store, download crypto position size calculator. After you download it, so this is the interface, okay? So you click on it. This is the interface of crypto position size calculator. Now if your analysis is long, which is buy, you leave it on long. If your analysis is what? Short, which is sell, you leave it on short, right? Now in this case our analysis is short, which is sell. We want to sell 𝗙𝗿𝗆𝗫, right? Now our capital, now let's say you have $100. Let's say you have $100 in your total portfolio account. You put $100 right there, right? Put $100 right there, and you are willing to risk 10% of $100. 10% of $100 is basically $10, right? Now what you need to do is to put 10% on that particular risk box, okay? Put 10% right there. So which means you are risking 10% of $100, right? If you put $100, if you put 100% there, okay, if you put 100%, it means you are risking everything, which is not a good way to manage your risk. Always risk 1 to 5 to 10%, depending on how much you are willing to lose. You are willing to lose, right? Now for this case, I'm going to put 10%, right? Now our entry price. What's our entry price? I'm going to go ahead to put our entry price on 𝗙𝗿𝗆𝗫. Our enterprise here is 0.17962. 0.17962, right? And our stop loss there is 0.18390. 0.18390, right? So, and 0.18390, that's our stop loss. And our trade amount is 10. Okay. I think let me correct something right here. This is a sell market. 0.17962. 0.17. Okay, 0. I made a mistake on entry, right? So 0.17962. So as you can see, we now put trade amount. Trade amount simply means the amount you are risking, which is 10% of the $100. 10% of the $100. That's what trade amount simply means, right? Now we have put everything here. We have written down everything in our crypto position size calculator that help us to calculate our risk. As you can see, the position size it's giving us here to use is 420. 420 is the right position size to use on $10, okay, risk, right? And the leverage, okay, the expected leverage we must use or we need to use is 42x leverage. 42x leverage. We don't want to go anything higher or lower than 42x leverage, all right? Except if that pair does not have that amount of or that high leverage. Okay, now we can now adjust it below, right? Now but what is important here is the position size. Position size is what matters here, right? Now we're going to go to bybit to actually put this position size as well as the other credentials. So this is our bybit right there. So what we need to do right here is to click on leverage and select. As you can see, this one have up to, not USDT have up to 75x. We are going to be using our 42x leverage, which is recommended by crypto position size calculator, right? So we now, the limit order is the limit order in which you want to enter for sale is 0.17962, right? And our position size there is 420. Okay, 420 is our risk, right? Now we head over to take profit and stop loss. The signal or the trade analysis is sell, which is short. You leave it on short here, and the take profit right there is what? 0.16195. Take profit is 0.16195, and our stop loss is 0.18390, right? Our stop loss is 0.18390. So do you see our risk here is $10, which means if this trade goes against us, we are going to be losing $10. Okay, but if the trade goes in our favor, we are going to be making $41, which is what? Times 4 of our risk. Okay, now let's go to our analysis to confirm the risk to reward ratio there. If we tap here, you can see, tap on the short positions tool. So as you can see, the risk to reward ratio here is 4.13, which means if we are risking $10, we're expected to make more than 4 times of that particular risk, and that's exactly what we achieve on our bybit. So as you can see here, it's done, right? So we now click on confirm. Now after clicking on confirm, there's one thing we need to actually pay attention to, which is liquidation price. We now click on sell, which is short. Okay, when I click on sell, which is short, right? Now when we click on sell short, you can see, pay attention to estimated liquidation price. If the market, your analysis is sell, which is short, right? The estimated liquidation price, okay, must be above your stop loss. It must be above your stop loss. Now if your analysis is buy, your expected liquidation price, if you want to buy, which is wrong, must be below your stop loss. So in this case, our analysis or our trade is sell, which is short, right? Now estimated liquidation price here is 0.25219, right? Let's confirm to know if our estimated liquidation price is actually above our stop loss. So we will not get liquidated before we now hit our stop loss. Okay, now as you can see, 0.2 is actually above, is way above our stop loss. So we are good to go in this case. So this is basically what most newbies don't know. Okay, now you now go and use high leverage and high position size to place a trade, and the trade will now hit your stop, will now hit your liquidation price before even hitting your stop loss, and you complain that you lose money. Why the trade first hit your take you out of the market without hitting your stop loss? It's because of this estimation liquidation price. You're not paying attention to it. So begin to pay attention to it even as a beginner, right? Now you click confirm. We are now click on confirm. Okay, click confirm. So it means we have placed the limit order right here. So this is the limit order. Okay, so as you can see on the chart right there, is there sell. We want to sell if the market come to our resistance level, right? So, and if you come here, you can see it. Okay, let's say you want to modify, you can click modify to modify your stop loss and take profit. Okay, so just like this place, right? And if you want to cancel, you can now equally cancel the trade. So if the trade triggers, you just have to monitor your trade. Then if you are making profit or you're making a loss, you are confident of how much you are willing to lose. Then if you are making profit, now imagine that you be able to at least do this every single month with higher capital. Like let's say you are starting with $100 or $200 or even with $10 as your risk. You can be able to scale up and grow your capital. You can be able to make it at least nothing less than, if you know what you're doing, applying all the strategy and risk management, take your risk management serious. Okay, you're able to achieve at least $500 even as a newbie, or even $1,000 every single month. Now if you have a higher leverage when it comes to capital, right, now you can even make more. Okay, because let me tell you the truth, the profitable traders who knows what they are doing actually make more losses than lose. But what helps them to actually stay profitable is the risk management they are applying, as well as the risk to reward, right? That's why I say your risk to reward must be higher than your what? Your risk to reward must be higher. I mean, it must be at least 2:1 upwards, and you must take your risk management very, very serious while applying the strategy to trade. How does this help you to actually navigate to futures trading, right? So if this video makes sense, if you find any value in this video, don't forget to hit the subscribe button. Okay, encourage us to do more. Like this video, you can equally share it to people that you know that okay, they want to start trading the futures market. Okay, so, and if you don't have any capital to start trading this futures market, especially when it comes to cryptocurrency, right, you can check this. You can check this problem here. This problem is actually going to help you to get capital to start trading the futures market, right, on their exchange. Okay, so you can be able to grow your capital and make profits, and you can be able to use bybit to actually trade. Okay, so I'm going to catch you up in the next one. Peace.